Ladies and gentlemen, welcome back to the channel. AMC stock is currently up about 3.5% at the time of recording this video. You're currently at $4.21 per share. Now, why is AMC up 3.5% today? Well, there's really no rhyme or specific reason for AMC stock to be doing so well. We did have this news. I spoke about this now in 2 or 3 videos, so we're not going to get into it too much. But lenders are meeting with AMC to figure out if they can bolster the company's balance sheet. That just means get AMC more cash, so they're in a better position come 2026 when they have to, pay $3 billion of their debt. That's not a good situation AMC is in. But the fact that they are trying to work towards a better scenario or outcome with these lenders is definitely a good thing. There's a couple different possibilities that could come out of this. Potentially, AMC could get, let's say $1 billion from JP Morgan, whatever the number is, at 7%. 8% pay off this debt in 2026. That is 10+%. Sure, that would save them a little bit on the interest payments, but it's not going to help them pay off that big chunk. AMC just really needs more cash, especially since 2024 looks like it's going to be not the greatest year for the box office in general, for the theater business in general. So a little problematic, but ultimately there can only be a good outcome here if they are meeting, if they are in these talks. And I think that's why AMC has been a little bit more positive as of recently. Now, you have also seen 10-year treasury yields taking a little bit of a breather over the past really like 2 weeks or so, last week or so. 10-year treasury yields are down about 3.5 basis points today, down from their highs at about 4.34%, currently at 4.2%, so down about 14 basis points, roughly half a rate cut or so. In I guess the equivalent that the bonds have fallen. So that has also helped AMC to get a little bit better of a footing here. The big problem is AMC is really struggling to get above that 50-day moving average. I don't know if we're going to get above that without any kind of news. I think we need some bit of good news at this point to get AMC above that 50-day moving average. Does that happen? Does it not? Not 100% sure. Obviously, don't know that. But based on what we're seeing the last couple of days, AMC is definitely a lot more bullish than bearish. Yesterday, AMC was up a lot more than it looks. At the high, AMC was at $4.30 per share, up over 5%. You ended up closing the day actually down about 0.5%. What you're also seeing right now in our markets is portfolio rebalancing. So basically what's happened is stocks are up 10% in Q1, bonds are only up like 1%. So money managers and hedge funds, institutions, they have to rebalance. If they have to stay equal weighted to the S&P, if that is part of their mandate, then Nvidia and these other stocks that have done very well have become overweights in the portfolio. They have to sell those, maybe put money into other areas of the markets. Maybe you could say bonds. Since bond prices have fallen, they're likely underweight now on bonds. That could be a reason why TLT is doing well today and why yields are falling. Again, when TLT goes higher, yields go lower, right? So, that could be part of what is happening today and possibly even coming into tomorrow. Now, what's actually interesting about today in regards specifically to AMC, you had GameStop report earnings last night that were just not good, just bad across the board. And GME today is down about 14%, albeit the stock looked really good heading into earnings. But just when the numbers are that bad, when you're getting 30% misses, yeah, it's going to be hard to not have a big drop after earnings, and that's exactly what happened. And that's really not feeding off into AMC at all. If anything, that could be to AMC's gain today. Maybe some GameStop investors are like, I'll go park my money in AMC. AMC's been at least stabilizing for a period of time now. With that said, we did not have any economic data today. And we're really not going to have much for tomorrow either. You are going to get Chicago PMI at 9:45 in the morning, final numbers for Michigan consumer sentiment, pending home sales month over month and year over year, as well as the last and final GDP number for Q4. You're actually expecting a big revision down here from 4.9% to 3.2%. So you're expecting GDP was not nearly as strong as a lot of people expected it was in Q4. Still very strong at 3.2%. You know, can you say anything negative on that? Of course not. The economy is still doing just fine according to this data. But if you do get that big downside revision, that's gonna make everyone basically like question, is the economy really as strong as we think? So some important data coming out tomorrow, but the bulk of your data that can actually move the markets comes out on Friday, and that is your PCE, personal income and personal spending report, as well as a speech from Fed Jerome Powell. But markets are closed, so I don't know if we're going to react to these numbers much at all. If we do, it's going to be on Monday. So that's going to make the move very interesting, just depending on how the data is. We're going to have to speculate overnight, you know, on Friday and over the weekend, just what that'll do, because, you know, we have no idea. So that's important to keep in mind. Really a wild card coming into next week. AMC stock, though, it's kind of doing its own thing. You know, it really doesn't care about anything else that is going on. Just period. Yesterday was one of those weird days where you just sold off a big gain. I'm not expecting that to happen today, but it is possible. It is possible. But AMC is really holding up with strength today. So that is definitely good. If we take a look at sentiment, though, it seems like the whole quote unquote meme stock sector of our markets have started to show weaker momentum and just overall less activity following today's, you know, move from GameStop, which is understandable. You do have sentiment today at neutral at 45, so even slightly on the bearish side, which is interesting given the stock is up 4% today. And again, most of that's probably the hangover effect, the lingering effect from GME earnings. Yesterday's sentiment was bullish at 64. Message volume today is at 58. Yesterday was at 47. So today you're high on message volume. Yesterday you were normal. And the participation ratio today is at 55. And previously it was at 56, 54. It's been roughly in this area for a while, and that's overall a good thing as well. More people talking about AMC is more potential buyers to buy the stock. If you take a look at the option activity here today from hedge funds and institutions, I'll go ahead and refresh this just so we have the most up-to-date numbers. And it looks like 4 orders totaling $265,000 with a positive order value of 0%. So, not a lot of hedge fund and institutional option activity. What I will tell you is short interest is really exploding in AMC. Yesterday, short interest was 14.27%. Today, it's 15.5%. That is up 1.25% overnight. That's kind of insane. That is what I would categorize as short interest is exploding. Like that's exploding. Typically, you don't see moves like that in short interest. But now you're at 15.5%. AMC is now a pretty heavily shorted stock compared to where it was to start the year. Let's say at about 7% for the lows. Little problematic for the shorts, if I do say so myself. Now, you have 164.7 million shares that are currently sold. $164.7 million currently in short positions, Days to cover 2.9, 40.47 million shares that are currently sold short. Shares out on loan 55.67 million. Cost to borrow 1.11%. Utilization of 72.25%. And a short score of 70.74 out of 100. So, the data over here just continues to get better. Let's just be honest there. It just gets better and better and better. And if you're a bull in AMC, if you want to see AMC go through a short squeeze, that is pretty much a must. You need to see the short interest continue to get higher, continue to get better looking, and inevitably you will see the squeeze, right? Inevitably there will be another big rally in AMC. How high, how long, when does that happen? Those are questions that I just don't have answers for. Now, expiring this Friday, you have calls in the money at about 7,400, calls out the money at about 60,000. Now you have puts in the money at 3,700 and puts out the money at 20,000. So decent amount of option activity heading into this week. And again, with portfolio rebalancing, that could make things a little trickier to read for this upcoming week. So definitely keep that in mind. So that's pretty much what I have for you today. There's not a whole lot going on out there in stock market land. Just here and there. This article, which is interesting, it says a majority of investors believe a stock market pullback is near, according to a CNBC survey. It says one of the biggest themes of the year so far for the market is the Federal Reserve and assumptions it will cut rates 3 times in 2024. Just 9% of those polled think the Fed should start cutting rates immediately, while an overwhelming 91% advise Fed Jerome Powell to keep things slow and steady. A majority of respondents on the survey, 61%, predict the Fed would only cut rates twice this year. Only 26% still believe the Fed's official forecast for 3 rate cuts is the magic number, and 13% said 1 cut was likely this year. Overall, in the Fed, 82% of those polled believe the central bank is doing a good or excellent job navigating the economy. Just 17% said fair, while nobody said poor or terrible. The quarterly survey of 300 chief investment officers, equity strategists, portfolio managers, and other money managers was conducted last week. There was an increase in the amount of people saying they believe a recession would hit in 2025. A majority of 52% believe that was likely, up from only 23% in the last quarterly survey. 39% said they saw no recession in sight, which is also higher than the 14% who believed it was unlikely in our surveys last quarter. So that's pretty interesting. It goes on to say, let's see. It says, sticking with tech, which has been hyper-focused on artificial intelligence, 39% believe it is time to sell out of AI-related stocks. So still not getting a high percentage of people that believe, you should actually be selling your AI stocks right now, which is pretty interesting. It says, many overseas markets have recently seen record highs, including Japan, the United Kingdom, and continental Europe, Canada, and South Korea. When asked where they were most bullish outside the U.S., 40% said Japan, 26% said Europe, and an equal amount said they would not invest outside of the United States. Just 4% believe China is the best place to invest outside of the U.S. right now. Interesting. And it says when asked to pick their top 3 favorite sectors, 61% believe tech is the best place to invest right now. So pretty interesting. Let's see. It says, if the stock market were to suddenly pull back, 65% said they go to cash as a safe haven, 26% to bonds, and 9% to high dividend stocks. None of those who responded favored gold, crypto, or real estate. Over the last 2 years, many investors favored the 2-year treasury in order for it to be more attractive than stocks right now. 54% said they would have to climb above 6%. That's a pretty far jump from where we are now in terms of the yield on the 2-year, which is currently at about 4.5%. In the last decade, the S&P 500 has compounded at nearly 13% annually. More than a fifth of respondents, 22%, believe it will continue to perform at an average or more than 10% a year in the next decade. The rest think we're more likely to be in the 5 to 10% range for an annual return for the S&P over the next decade. So Um, I believe that is all to this survey, if I'm not mistaken. I did not catch the market crash pullback statistics, but there is um oh, right here, the S&P is up 9% in the first quarter, which would be its best start to any year since 2019. However, just 39% think there's more room to run. So a majority of institutional, money that was polled in this poll from CNBC believe that a pullback is coming. A vast majority, only 39%, think there's still more room to run. Yeah, that's pretty low, and people are not bears though, so that's pretty interesting. So a pullback here, correction in the markets, whatever you want to call it, probably coming at any time now. And what kind of effect does that have on AMC? Well, I think AMC is better priced for some kind of pullback or correction, but AMC stock would also fall as well in that specific scenario. Hit the like button, subscribe to the channel. Let me know what you think about this information down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.